Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news that China may be going off the ball somewhat, but the rest of the developed world is in full shortages everywhere situation. In New York, business activity continued to grow at a solid clip in the state, according to the Fed factory survey there. New orders and shipments expanded strongly, and unfilled orders increased in May. Both input prices and selling prices rose at a record-setting pace. Firms said they were optimistic that the conditions would improve over the next 6 months and expected significant increases in both employment and prices. House prices in China rose 6% in April in their major cities from a year earlier, and that is a fast pace for them. In second-tier cities, the year-on-year rise was more like 11%, and fast enough to cause policymakers some concerns. And China's industrial production grew a hot 9.8% year-on-year in April, and that was a slower expansion than the March 14% rate. Electricity production was up 11% in April, and that's an increase of 11.3% over April 2019. So this is evidence that the pandemic effects are behind them. However, over 2 years, this suggests the real recovery is relatively subdued. China's retail sales growth data feeds into that feeling. Retails are up 18% in April, and that is considered a big miss. Excluding price factors, the real volume increase was only 16% in 1 year and only 2.3% over 2 years, confirming the weakness in the retail bounce back. And the bounce back in Japanese machine tool orders was very strong in April, continuing what we saw in March. Japan also reported producer price data for April, and that revealed a 3.6% rise year on year, well above the March 1.2%, and also above the 3.1% expected. One component is eye-catching, however. Export prices are up 8.2% in a year. Very high demand for intermediate goods just isn't going away. The new week has started with prices for key commodities rising again, especially for iron ore and copper. And the latest edition of a key logistics managers survey suggests strongly that shortages and high prices are here to stay for at least the next year. This shortages everywhere situation feeds on itself as firms order early and heavily to try and beat the rush. The US Treasury 10-year yield starts today at 1.64% and unchanged from this time yesterday. And the price of gold starts today up a strong $22 and now at $1,867 an ounce. And oil prices start today slightly firmer at just over $66 a barrel in the US, while the international Brent price is just on $69 a barrel. And the Kiwi dollar opens today at 72.1 US cents after an overnight softening. Against the Australian dollar, we're lower at 92.9 Australian cents, and against the euro, we're down to 59.4 euro cents. That means our trade weight index starts today at 73.7 after the across-the-board retreat. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.